Mr. Roboto, please get this thing started.
Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither philstockwell.com, PSW, nor its affiliates, nor any of their respective officers, personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the OCC website www.optionsclearing.com to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any loss you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously and we will not distribute or sell your information to anyone.
All right. Let's see. I don't know why we don't sell information to anybody, though. I mean, everybody else does. We should get into the information selling scam, I think. All right, so what's going on? Well, the markets are basically a disaster. We came all the way down here to about 20,800 on the Dow and 2450 on the S&P, which is right about the bottom. We believe the bottom of the band should be about 2,400, so we're right back there. The NASDAQ is holding 7,500. It was actually kind of a good bounce line to play. And the Russell, well, forget the Russell, they're hopeless. Oil has been holding 20 so far. That's, I think, my only active bet in the futures is a couple of oil longs to the left. And other than that, we're out of everything. And what else is exciting? Gasoline coming back to 55. I think that's a good long to play. Went a bit below. Natural gas is even lower now than it was before. I wanted to play it at 160, and now it's at 150.58. Copper, I'd like to see copper a bit lower before I want to play that. Gold came back to 1,600. Silver at 14 is definitely a play. I can't believe I missed that earlier. Definitely like silver at 14 for long. Do I like it at 1408 though? That's the question. That's where it gets tricky, because I missed 14 and now it's 1408, and of course I think it's going to go to 15 eventually. So you know, you can say, oh, go ahead, but it's still, you missed 8. It's like that's $400 and the move of 8 cents. So I'm not feeling too good about missing that. So I think I'd rather watch it and see if it comes down a bit than get in here and then get burned like an idiot. See all the conviction force and silver I should, but I don't. I just I'm more, the action of it has been bothering me lately. But so we're not going to talk too much about this stuff today because we got a lot of things to cover. 10 seconds delay from typing till you read it, Greg says. Wow, that's a lot. Okay. Interesting. So that's good to know. That's why I end up talking to myself all the time on these things. All right, so although I talk to myself when I'm home anyway, so I am a self-talker. I will sit there at my screen and yell at the screen and things like that. So what is this? This is the earnings portfolio. I know that's something I wanted to talk about. We'll get back to that later though. So it's not bad. It's holding up well considering, you know, considering what a shit day it is. Oh, you know why? Because we put hedges in it. That's why. That's why the earnings portfolio is doing so well. Look at these hedges. These two cancel out, so plus 28,000 there. It's only 100,000 portfolio, so plus 28,000 there, and that cancels that, and that, and that, and plus about 10,000 there. So we picked up about $35,000 here which is the entire gain of the portfolio. So overall, the portfolio is down, but we fortunately have hedges that are making up all the money. So that's clever, right? But we're so bearish because of these hedges that we actually are doing better on a down market than an up market. We'll have to deal with that too. We just did a big changes in the short-term portfolio this morning. That's super important. So let's take a look at that. Home. It is not Monday. It is must be Wednesday, so we're giving a webinar. Okay, so short-term portfolio, which the live version is here. And 382. See, we're not. Oh, I'm sorry, I didn't make the changes. So of course, I haven't logged in the changes from this morning. We flipped more bearish this morning, and this is why. This is why. I mean, now we're down 850. We were down like 700 this morning. We were down 500 and something at some point. But when you see this kind of weakness and you have to protect the long-term portfolio, you don't have a choice. You have to, get more bearish in the short-term portfolio. So that's what we spent the morning doing, was going over the short-term portfolio positions. We added the FAZ hedge, which is if the financials go lower, and FAZ popped 18% already today. We altered the SQQ trades and the SDS trades to get more aggressively bearish. And that was it. I mean, that wasn't that complicated, really. So we made a couple of moves to goose up the hedges on the portfolio. Oil, let's take a look at oil before it gets that. So oil is one of our plays in the short-term portfolio. We think 20 is going to hold as a bottom. We think it'll go to 30 in the summer. So we have the July 3.6 spread, I believe it is, in USO. 3.6 spread. So if oil's at 4 now, 50% higher would be 6, obviously, right? So meanwhile, oil's at 20 and 50% higher would be 30. So it's not complicated. So all we're doing is betting that. On the short put side, we're a bit more aggressive, but in reality, we did it just to sell and collect the money, because we collected 550. So we netted in for 450 on the short puts. So we don't really care as long as oil is above 450. And once again, 450 is certainly where we expect to be. So, as long as we break even or better, it just turns this into a free trade. If we happen to get lucky enough and oil pops all the way back up, it's a free trade. If not, add $11,000 to the cost of this trade. But there's no harm, no foul in taking the $10 puts. See, that's a very important thing people don't understand about puts. They always say, well, why'd you pick that target so high? It's like, we picked that target because it paid 550. And so it has the potential to gain 550. If I picked a target that was if I picked the $8 puts for 250, it would have netted 550, but I could only make 250, no matter how high it goes. I can only make what I sell it for. So if I can get better money for selling the $10 puts, and I think $10 is a theoretically possible target, we'd be back at like $60 oil if that happened. But it's all the way in 2022. So by 2022, could oil be back at 60? Sure, it could. And if it's not, I don't care. As long as oil's more than 30, more than 25, really, we're fine. So, all this is a bet that oil's going to be over 25 because I collected enough money to break even at $25. So it doesn't matter if I have to give it back. Then it's just a free loan. I just kept the money until I had to give it back at some point. So that's interesting. Oh, speaking of free loans, by the way, hey, if we all have experiences, let's talk about that. I mentioned that in chat too. We should all talk about experiences getting loans. Like we'll apply for, PSW will apply for a loan. It's weird though, because it's like the companies that we invested in can't apply for loans because they're kind of startups and they don't really draw salaries and things. So it's a tricky situation. I'm going to have to ask the SBA if it's possible for us to do something on their behalf and help them out too, because otherwise these guys are going to collapse, some of them. It's a really tough time. But on the other hand, it's a fantastic time. If you have money, it's a fantastic time to invest because people need money really badly, and they would be willing to concede a lot in order to get it. So it's one, you know, if I had a couple of $1 million in the marijuana space right now, we could really own like several large companies. We could pretty much take a big stake, and because cash flow is so hard to come by, and the marijuana industry is not being bailed out by the federal government because they're still federally illegal. So none of these bailouts apply to people in the marijuana business. Very annoying. Where are we? Short-term portfolio. Was I going to talk about that? No, I was going to talk about the EIA first. I don't think there's going to be much here, but obviously oil disaster. March 27th, that is the correct one. So what happened? We had a massive build, 13.8 million barrel build, 7.5 million barrel build in gasoline, and a 2.2 million draw in distillate. So at least somebody's using some distillates. I don't know what for, but somebody's using them. All other oils are basically flat. They had a small build also. But the total, look at that, 900, 1921. So we went up 21 million barrels added to storage from last week. Our exports are still running pretty hot. So we're still exporting 3 million barrels a day. I don't know where they're going and who needs them, but somebody's using some of our refined products. Refinery activity. Crude oil input to refiners has actually been the same. Okay, so we're still putting the same amount of oil to the refiners. Refinery capacity utilization going down a bit. That means more refining is coming online while we're not even putting more oil in. Gasoline production has dropped a bit, but not terribly. Distillate fuel production has been steady. Exports, like I said, products supplied. Less gasoline has been supplied. 600,000 a day less. It's not nothing. That's like 4 million barrels a week less gasoline, and still we have a 7 million barrel build. So the refiners stopped making gasoline. We kept exporting it at a pretty high clip, but still a huge build. That means there's a real problem with gasoline usage. I don't understand who's using the gasoline though. I mean, this is a weekly report. So I don't see these cars on the road. I don't see who's using all this gas. I'm not sure what's actually happening here. Distillates, flat production. All other products, flat production, basically. So not big changes there. Price-wise, this is interesting. Last year, $2.60, now $2. That's at the pump. But on the chart, where's my futures? Yeah, I mean, this pisses me off. So last year, gas was $1.60. Now it's 50 cents, 60 cents. So that's pretty significantly down, yet it's only about 20% off from where it was last year at the pump. So it's down 2/3, yet you're only saving 20% of the pump. I mean, this stuff is such a horrible scam. Look at oil. Oil was 60, now it's 15. It's down 75%. Yet gasoline's still right in the same range. That's horrible. But who are you going to complain to? It's so hard. I mean, it's so ridiculous. You can't even complain. Nothing's going to happen. Nothing will change. Just keep getting ripped off. You're being robbed, though. You go to the gas station, you're just basically being robbed. They're charging you a price that is not even close to being in line with the reality. They just charge you no matter what. They don't care what they ask. They're just going to charge you what they want. Let's see. Greg says it's not us. It's GoToWebinar's chat. Well, I mean, I guess it's still we're using it. So, my main concern, says Todd, is with USO down. It says a reverse split. They probably won't do a reverse split unless they get to, well, You're okay. I'm going to give you that one. You're right. Because I was going to say it won't get down until it gets down to like 1 or 2, but they're basically down to 1 or 2. So, yeah, it could happen. I don't think it's going to last long enough for them to decide they're going to have to split it, though. But could be wrong. I mean, it's never been this low before, so you can't tell what they're going to do. What is your opinion on selling puts on oil futures? For example, a 1750 put that expires on Friday is paying you $300 for a contract. Ugh, Tim, I don't know. But the risk outweighs the reward by miles. I obviously we don't think it's going to go to 1750, but that's always the logic with selling these out of the money short-term puts and calls. Everybody says the same thing. I have seen a couple of dozen people in PSW over the years come in with that strategy, not that exact strategy, but the concept conceptually. Oh, if I sell a this week's puts and calls that are 20% out of the money, there's no freaking way that's going to happen. And these guys seem like geniuses for, they could seem like geniuses for months on end. And then one day, boom, they disappear. You know why they disappear? Because there was one big move against them, and it wiped them out completely. And they're all embarrassed, and they go away, and they don't come back. It's funny how often the same pattern repeats. And I always try to say to them, I'm always like, you're talking about making $300 against. If it went down to $15, you'd be down $2,500. So you have to be right 8 times in a row without being wrong in order just to be even. That means never at all. Now, I know you're saying, oh, 1750, though. Come on, that would be ridiculous. But if you look at oil, it's not about 1750. It's about, is oil capable of doing that to you? Whoops. Hang on, close it. And I don't just mean oil. I'm talking about generally anything. So you're saying, oh, I want to take the 1750s. So what's your premise at 1750? Your premise is that oil isn't going to move $2.50 and burn you, right? So that sounds well and good, but unfortunately, if you did that last week, you would have been down $5. If it was at 25, you said, oh, I'm going to sell the 20 puts, whatever. I understand we didn't cross 20, but that's what can happen. If you were in this week and you sold the 2750 puts because we were at 30, and you were like, oh, well, because where are you now? You're on the 20 line, right? So here you were on the 30 line, and you could have said, I'm going to sell the 2750 puts for $300, and then 1, 2, 3 days later, you're at 20, and you're out, $10,000 per contract. So it's not about, whether you're likely to get burned. It's that if you get burned, how burned can you be? And here's another one. I mean, in oil's case, look at what it does. Here it went from 45 to 30. And here it went from 30, here it went from 33, 34 to 22. These are less than 5 days. So oil is capable of making incredibly violent moves against you that would wipe out your investment. Therefore, it's extremely risky because you're basically playing Russian roulette. You're saying, now, if you did it here, if you had done it this whole time, and we're looking for moves of more than 250 in a week. So here's one move of more than 250. That's more than 250. That's more than 250. So that's more than 250. No, maybe not. That one's more than 250. I mean, we're pretty much coming in once a month with a 250 move in a week. So almost every month, oil does actually move 250 in one of the weeks. Now, whether it goes way past 250, that's a whole different issue. But the point is, it doesn't matter if it goes a little bit past or too much past. If it goes anything past, you lose money. So what if you make 300, lose 300, make 300, lose 300, make 300, lose 300, and let's say you win 2/3 of the time, or let's say you win 3/4 of the time in 30 weeks. That means you're only going to net plus 10. Wait, 3/4. Sorry. No, you're going to net plus 20. So you'll net 20 wins out of 40 attempts. because 10 will cancel each other out. Assuming that you picked up the same on both ends, of course, you could be unlucky one way or the other. So I'm sorry. No, it's worse actually, because you're selling a put, so you are limiting. You're limiting your gains. You're not limiting your losses. You're limiting your gains. So if you hit a bad streak, it's fine if you do that and you make 20 times 300, which is $6,000, right? But the problem is you can actually lose $6,000 on a single move against you and get completely wiped out. And what if before you make $6,000, you have 2 moves against you that cost you $6,000? Then you would have to be right, or 75% right, for an entire 40 more weeks just to get your money back. And if at any point during those 40 weeks you hit 2 wrongs in a row again, you could end up being miles behind. And so that's why. And that is exactly what happens to these guys. It's like they think they have this incredible system, and they're making a little bit of money, a little bit of money. It's like our butterfly portfolio. It's not unlike it at all. Butterfly portfolio went down tremendously in this thing. It was more from margin, more from the volatility issue than it was from the actual positions. But nonetheless, the point is that you know, it's the same kind of strategy, except with the butterfly portfolio. The reason we don't do weeklies is because we want to have a big cushion in case we get burned like we did recently. I don't want to collect a little bit of money every week. I want to collect a lot of money every quarter, and so much so that we don't think we're going to get burned. At this point, the butterfly portfolio is generally bullish because we just flipped everything bullish in the last batch of changes. If it ever comes up, there it is. Okay, so now it's up 64%, which is basically where it was hovering anyway, so that's fine. But we are aggressively bullish. Oh, we're aggressively bullish, and today's a terrible day, so you know. But we have. I don't know if did we log these changes yet? Where's our changes? Now that's today. Dun, 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 dun. That's the debt clock. The virus isn't too depressing. I don't even want to talk about that. Wait, what's that from? 411. No freaking way. Wow. All right, I don't know if I want to get into that now. That's freaking depressing. What the hell were we just talking about? Oh, good God. So we go to the portfolio tab, we pick up the last portfolio review, and we look for butterfly. Butterfly, there it is, 3.5. Oh, is that why we do that so early? Oh no, then we did another one later. I see, we did a 3.5 review and then we did another one. All right, so the point is, did we make these changes? Apple has June 22s, June 200s. We could roll our loss to 25 of the June 200s. So if we have 25 June 200s, we know we did it. We did. Okay, so these are the updated positions. What was my point? My point was we are aggressively bullish now. We don't have our normal short calls that we have, so it's a little bit weird. We have the May short calls on Amazon because we sold those a while ago. And look at the crazy number. Amazon's at 19, and this goes to and we sold these for 87. So that is kind of close actually. But we have a nice spread. We have a big spread here that's triple covered, so we'll be okay. Disney, we're basically just bullish on. Mondelez is bullish, MJ bullish, Whirlpool bullish also. Oh no, we do have 5 short calls, but again, triple covered. So you can see that we're bullish because we're very heavily covered on these things. And X is straight up bullish. So, you know, we flipped the butterfly portfolio bullish at this point because it's silly to sell short calls in this environment. That's another thing, by the way, is you can't always consistently sell those puts because there's a good point. See, here's the thing. You could sell right now. You say, "Oh, I'm going to sell these." Your risk. So you're saying, I think if I could consistently sell these, I'll make money. but you can't, because what's going to happen is you sell these guys for 300, but in a couple of weeks you'll be at 25. So what, are you going to sell the 25s for 300 bucks next? And then when we get to 30, you're going to sell the 30s for 300? You're just begging to get burned at some point, right? We're not going to go up and up and up. One time it'll whip back and you're screwed. But you won't get $300 if you don't sell the ones that are close to the money. So again, that's why we don't do this. And that's what happens to the guy. That's especially what happens to these guys who keep selling these short calls, because it's here you go. I mean, you go Apple, nice, steady, consistent stock, right? And they sell it and sell it and sell it, and Apple only moves a bit each month, so it's okay, and blah, 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 nothing big. And then all of a sudden they get burned up here, then they get burned going the other way, then they get massively burned here, then they get burned again, burned again, burned again. You can see how fast you go broke with that kind of strategy, right? It's like, you know, it's like, oh no, it's not going to move 10% again. Yep, it moves 10% again, 20% in a week. You know, or you want to really get killed, try doing that with Tesla. But it can happen to anything. You know, it's, you know, since February, find a week, it didn't move 10%. So that's why I don't like this place. Where were we? Oh yeah, butterfly. And then I found the butterfly, right? So we decided the butterfly was updated and it is bullish. Okay. More to the point, the earnings portfolio had a lot of good adjustments in it. So I think we should pay attention to that. EARN. See, and again, we did a couple of these. We did a 3-5 earnings portfolio adjustment when the market first started, you know, when we first started having these heavy drops, right? We did on 3-5, we did adjustments. And then we did another set of adjustments on 320-ish, 23rd, I think, 22nd. And we were down 32%, and now we're up 26%. So that worked out. So where's the other one? Yeah, so here, this is important to you. On 3-5, we were down 8%. We made a couple of adjustments, not many though, because we weren't dying to make our adjustments. We adjusted Haynes and we adjusted Win. And then, oh, I'm sorry, no, we did more. Then we did Cliff, they're just out of order. Then we did Cliffs, HRB, IMAX, Macy's, SQQ. So we did a bunch of adjustments. And like I said, these SQQs really saved us though in the end. But then we went from down 8,000 to down down 30-something thousand. But then what did we do? We got more aggressive. And why, by the way? Oh, this is important too. Cash. We were only using, we had fairly small positions, see 5, 10, 20, 10. You know, we didn't have any big positions. This is Aurora Cannabis, that doesn't count. It's a tiny little stock. This is Cliff, it's a $5 stock. Okay. We knew this on this portfolio that we picked mostly cheap stocks. You see Win, where we have a lot, where it's expensive stock, we have 3, we have 2. I think that's our most expensive stock. All the other stocks are $20. iRobot is our biggest position, actually, 10. We also hedged it, which is key. And the hedging is what really saved us out here. So then we had and then we added to the hedge. Let's sell 15 of the June 25s and lock in the gains. Then on the next set, which is only 2 weeks after the first set, we got much more aggressive with SQQQ because the market was starting to fall apart. And I said, I want to add back 30 for the weekend. Let's do it this way, blah, blah, blah. So we adjusted and got much more aggressively bearish on that. And that's where all the money came from. Like I said, this portfolio has actually only gone from minus 32% to minus 10% from all these adjustments, except the SQQQ. The SQQQ has made up all the rest of the money. The SQQs are adding $30,000 to the portfolio, which has taken us from minus 10% to plus 20%. And that's the difference between hedging and not hedging. But it's not just that, because the hedging which I wrote about today in the thing. The hedging allows you to be more aggressive with your calls. It sets you up, knowing that you have a backstop, knowing that you can't be wiped out, allows you to say, yes, I'm going to double down on Macy's. Yes, I'm going to double down on this, because you say to yourself, if those guys get wiped out, then then the whole market's going to go a lot further down. Maybe not Macy's anymore because they just got booted from the S&P 500. But if you say if these stocks go down, they're going to, it's going to make it up. Or the one I added today, I added SKF today to the short-term portfolio, because if the banks have bad earnings, the whole market's going to go kablooey. All right, so we have a specific hedge on the banks, but on the other hand, there's a lot of good cheap banks, and we already have short puts on JP Morgan, but there's a lot of good cheap banks out there that we can pick up. We have TD Bank, we have JP Morgan. I don't think we have Goldman Sachs or anything, so we have to look at Goldman Sachs and some others, but we can add those in knowing that we have a good banking hedge. Same thing for the NASDAQ stocks. We have SQQs, we have SDS hedges. We are hedging we're hedging the things we're most likely to buy. We're most likely to buy tech stocks. We're most likely to buy S&P 500 companies, blue chips, because that's what we like to buy in a crisis. Okay, don't forget the earnings portfolio is kind of a weird mix. It started out with earnings plays. So now we had somebody going to earnings and we thought they would do good. We jumped on the play. That frankly never worked out for us because the earnings season was kind of weird and we didn't really make the money we thought we'd make, but we ended up pressing them into long-term plays. And that's what the earnings portfolio is. So now it turns out we have a lot of cute little bargain stocks. So it's called the earnings portfolio, but it's more like a long-term portfolio now. And we have pressed these plays, but how have we pressed the plays? First of all, key number one, we have a lot of cash. In a $100,000 portfolio, $85,000 in cash. Here, because we started selling a lot more puts and calls, we had $138,000 in cash. But our because we sold puts and calls, we had negative 70,000 value there, so the net was only 67. What do we do here? Oh, not here. What did we do here with those adjustments? The adjustments, we've spent $30,000 of our cash, but we've also, our positions have improved to -10. But like I said, that's because these guys are plus 30. And our total value has gone up, but still swimming in cash. Swimming in cash is the key because you can weather any kind of market storm if you stay mostly in cash. And because the way we run our portfolios, we only need to use about half our cash to make, we pretty much, the money in play, we almost double it every year. So, we're 50% invested, we're still going to make 50%, even though the portfolio is only 50% invested. Because we are basically doubling the stuff that we do have in a good year because we take a lot of the, I wouldn't say a lot of spreads, every spread. I really don't even want a spread if I can't make 100%. You guys know that. It's like, I like spreads that make 200%, 400%. I don't want to make 100% because when you win, you should win big. And when you lose, you should control your loss. That is just basic investing. That's that. What are they? It's another variation like Can Slim method thing where they tell you let your winners run and control your losses. I mean, that's just basic logic. So there's two ways we control our losses. We don't put that much cash to work in any given time. We do commit by selling short puts, but we also, for the most part, keep those under control. Not all the time, but for the most part, because sometimes we have a lot of conviction on something. And frankly, those are the ones that burned us the most. So I'd say probably it's not the best advice. Don't always do that because the biggest burns we've ever had is from rolling puts and doubling down. The stock keeps going down and down and goes bankrupt. So we're trying not to do that with these, certainly in the smaller portfolio. But as you see, we have 10 short Aurora puts at $2. That can cost us $2,000. 10 Cliffs puts at 7 can cost us $7,000. 13,000 on HBI. So there's nothing, nobody's going to burn us. 15,000 on H&R Block. 40,000 on iRobot. That's our biggest risk so far by miles. 5 short Macy's puts. That's embarrassing. Why? That seems like we should have more. Wow. Okay. We should really sell more of those, or at least roll that one down. And then we got the SQQ, and then we have the 10 short wins at 50,000. So there's 2 biggies, iRobot and Win. We could get stuck with a big chunk of. But then again, you say, well, iRobot, are people going to stop vacuuming their homes because of the virus? Probably not. You know, that's not a bad thing to have. And then Win Resorts, that's a little more tricky. I wouldn't have thought this was. We started out with 5 and we rolled to 10. And I'm not pleased, obviously, about this because these are hurt. Well, these are ahead, but on the whole, we started off with this. We have to get out of this hole. You know, but the $50 calls, they're at 50. But we just read an article today that said in Macau, you can't go to the casino. You can open the casino, but nobody's going to come because you have to spend 2 weeks in. If you fly to Macau, the government in Macau is going to hold you at the airport and quarantine for 2 weeks before they let you out into the city where the casinos are. So nobody wants to go. Nobody wants to gamble that badly. I mean, well, maybe. I mean, some people do, but you know, on the whole, I wouldn't say that's really something you want to base your business model on. You know, especially the whales who want luxury. I don't think the Macau quarantine zone is a luxury accommodation that you know, has gourmet meals and butler service and so on and so forth. So it makes it a little bit less of a intriguing thing to do for a vacation if you have to sit there and get strip searched and placed in a quarantine and monitored for 2 weeks. That probably puts people off. So I'm a little worried about the win position because I'm not sure how long it's going to take for this to get normal. Bernie says, Gunlatch has concerns relative to holding the March lows. I'm not sure you've seen this entire presentation, but what are your thoughts? Aha, well, I think he's one of those people who loves to scare you out of your positions. And, you know, I mean, obviously there's a case to be made, but, you know, I think that what you know, it's like today, for example, right? Trump said something that was true. Trump said, we're heading into 2 really, really bad weeks. The numbers are going to be horrendous. The spread of the virus has already happened. All we have to do now is test and find it. It's, you know, in other words, you can lock down everybody, but X amount of people already have the virus and are what they call asymptomatic, that haven't actually shown symptoms yet. And you have no idea how many people are really sick. There's no way to know right now. As we start testing people, we will find out how many people are really sick. But the answer is more than the number that we already have. So if you are completely ignorant of that, and if you have previously trusted Donald Trump to tell you the truth and tell you how that it was going to be fine and it would all go away and it wasn't going to be a big deal, blah, 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 and Larry Kudlow says it's not going to be a big deal. If that had been your opinion, then you are shocked by this turn of events. But if you were rationally looking at the data the way we were, in fact, exactly this, like last week, I think it was last week, didn't we have a very depressing webinar last week? Because I saw this number and was very depressed. And we talked about it at length. And I said, these not good. That was March 25th, not good at all. All right, and I don't even want to put up the other chart. I'm going to get into it again. But we've been watching these numbers, 94, 121. Now, 121 is you know, 33% more than 94, right? But 211 is 66% more than 121. And then 441 is 100% more than 211. You see where this is going? So I don't really need Donald Trump or even the doctor guy, whatever his name is. I don't need these guys to tell me things are getting worse. Here we are 1 week later, 887. No, oh, whoa, shit. Did that just go from 887 to 905 while I was looking at it? What is it? It's like the debt clock now. Yeah, this is what the virus clock's gonna look like soon. You're gonna have to have a national virus clock. I mean, mother effer. Come on. So we're now faster than 100% growth. Okay, deaths, more than 100% increase in deaths. Recoveries, no, not so much. Recoveries 111 to 190, not doubling. Okay, recoveries were 83, 111, 190. It is picking up a little bit, but that's up 100%. That's up 100%. Not slowing down. All right. We didn't think it was slowing down, but we also already calculated that in. I wrote a week ago that, where was it, Friday? Ugh. You're so prolific, that's the problem. Let's see. There you go. It's 24 hours later. The U.S. has gone from 69,000 to 85,000 cases in the past 24 hours. There will be well over 100,000 cases on Monday. Yes, obviously. In fact, what's our U.S. number now? 200,000. Jesus Christ. And 200,000 by the end of next week. So I was being conservative here. And if we're still not getting things together and responding, I mean, this was a done deal last week. We knew this was going to happen. And if we're still not getting things together and responding to the desperate needs for protective gear in the hospitals and serious protocols that have to hold the spread of the virus, none of which we're doing, none of these things have happened. The only thing we'll have by Easter is 500,000 cases by 4/12. We have 12 days to get to 500,000 cases. I think we're right on track. Isn't that amazing? We are right on track to get to 500,000. So here's the point. So when I wake up in the morning and I see this horrible numbers, these horrible death totals, the horrible spread of the virus in America, I'm not dumping my portfolio because I knew that was going to happen. And so did other people are intelligent enough to analyze numbers. There are people at Goldman Sachs and JP Morgan and whatever who did the same math I did last week. And we're equally aware that our administration is completely incompetent and handling things poorly and not doing anything they need to do to halt the spread of the virus. That was so obvious to us last week. And I get hit up because I'm being political and I'm being mean to the president. And I don't like him. I don't like Donald Trump. What did he ever do to you? I can kill 45,000 people or whatever. It's like, it's not, I mean, this is just out of control. And this is why I didn't like Donald Trump 3 years ago, because this is what you see. You can see this happening under his watch. Same thing with George Bush. When 9/11 happened, I wasn't freaking surprised. The guy's a boob. He should never have been in office. Could somebody else have stopped it? I don't really know, but I know that he couldn't. And it's the same thing with this. Can Donald Trump fix this? Does Donald Trump have the tools in his tool belt to fix it? Okay, if you have a heart attack and you need a triple bypass, do you call freaking Donald Trump? No, because he doesn't know what the frick he's doing. He'll tell you he knows what he's doing. He'll tell you he'll say, I had an uncle who was a heart surgeon, so therefore I'm one of the greatest heart surgeons of all time. That's his thing. He believes he can do it. He really, in his mind, probably believes he can fix your heart. But don't let him. So when the guy goes to run for president and you know he can't do the job, don't vote for him. And that's why I hate, quote, Donald Trump. I don't hate Donald Trump. I hate that Donald Trump is president. It's too serious of a job to put somebody like that in the office. And it's not just him. It's and you can see what the problem is, because he surrounds himself with incompetent people, and he surrounds himself with sycophants who praise him and tell him how great he is even when he sucks. And therefore you get into situations like this where even while he's completely blowing it, he's telling you how great it's going. Just gets up there and flat out lies. He lies to the point where NPR stopped carrying his press briefing on the virus. They play the Dr. Fauci when he talks, but they don't play Donald Trump's opening remarks, because Donald Trump's opening remarks have 99% of the time been factless. Not just factless, but detrimental to the public health. They've been wrong, misinformation. So NPR and I think a couple other stations have now stopped broadcasting Donald Trump when he speaks, because he is broadcasting incorrect virus information that is dangerous to the health of the people watching. That's why I don't like Donald Trump. That's why I didn't like Donald Trump 3 years ago. And had we had a city that got nuked, or had Canada invaded us from the north, or whatever the situation would have been, had the Michigan already did have a poison water supply. So had something bad happened on his watch, it would have been handled incompetently, and it would have hurt the standing of America in the world, because look at the freaking guy. So is this a surprise? Forget 900,000 more wide. I mean, it's not, you can't say it's all his fault, but this is his fault. We had 15 cases. He got up there and told you we only have 15 cases. He came up when we had 5 cases too. We had 5 cases, and then a couple of days later we had 15, or maybe a week later we had 15 cases. We had 5 cases. He said, this isn't a thing in America. We only have 5 cases. It's nothing. They'll be all fine in a week. Then we had 15 cases instead of 5 in a week. And he says they're all going to magically go away. And then we had 100, and then we had 200, and 2,000, and 20,000, and 200,000. And the whole way he has not done anything he needs to do to stop it. And now it is essentially too late. So now you have to deal with the reality. But like I also said last week, though, I said it gets to a certain point, and we are halfway there. We'll be there by Easter, at which this will be out of his hands. He won't be able to screw it up any more than he's already screwed it up, because it'll be up to the governors, because each governor can declare their own state of emergency, put in their own laws, call out their own National Guard, and they don't have to listen to Donald Trump at all. They can go, and most states have a balanced budget agreement, so they have to balance their own budgets. They have to get their state legislatures to specially pass laws, but they will, and they'll pass laws, and they'll change laws, and they'll do whatever it takes to allow them to spend what it takes, do what it takes to get this virus under control on a state-by-state basis. That's what's going to happen. And it won't stop it from going from 500,000 to 1 million to maybe 2 million in America. That's like, way more than they were on the world. Don't forget, there were only 80,000 cases in the world like a month ago. Now there's 200,000 in America. We are going to, this is the world total. America will hit the world total again, because we're still completely out of control. And I don't see, this is what I look at. I'm looking ahead. I'm saying, well, what's happening this week that's going to stop us from getting to 400,000? What's going to stop us from doubling next webinar? How are we going to be under 400,000 next week? We're on a doubling path every week. So what, between now and next Wednesday, what do I expect? And it's not just me, I used to consult with these people. It's people, there's people in a room right now, JP Morgan, Goldman Sachs, they have the finest, that's not Trump, but they do. They've got the finest experts in the world who are running all the models and all the simulations, and they are looking at this and they're saying, well, we're not going to suddenly have 100,000 respirators. We're not going to suddenly have 8 million masks. We need hundreds of millions of masks. We're not going to have 8 million masks. I think we have 1 million. I think we had 1 million masks since this thing began. And a doctor theoretically should be, doctors, nurses should be using it, and the patient should all be using it, a new mask every day. But since we already have 200,000 patients, that means every week we need 1 million masks just for those patients. And then if 3 people take care of them, we need 3 million masks, 4 million masks a week, just for the doctors, the nurses, and the patients who directly have the coronavirus already. That's not even preventive measures for the other people, for the other 300 million people in the country who don't have the virus and would like to stay that way. We don't have any protective gear for them at all because we don't even have enough of the doctors and the patients who actually have it. That's the situation. That's the reality. All right? But that wasn't the question, was it? I don't even remember what the question was anymore. The question was, Gunlich, right? Who's being passed. So Gunlich only just realized this is happening. Don't know what Kool-Aid he was drinking before, but Gunlich just woke up and goes, hey, this is really bad. Okay? I don't believe, I know it's really bad. I knew it was really bad in January 23rd when I said there's 1,000 cases in China, this is really bad. Because there's a certain critical mass that you hit in a developed country. What made it really bad in China? It wasn't just that there was 1,000 cases. It was that there were 1,000 cases and Chinese New Year was starting, and those people were going to travel, and China had not locked down yet. That's what made it bad. If one infectious person, and you see this in the movies all the time, it's not like a surprise. Okay, like how many freaking virus movies do we have to watch before we understand how it works? One infected person gets on a train and sneezes on someone at the airport. That person goes and infects people. The next person they come in contact with infects people. And before you know it, the airport's all infected. And then everywhere those people go becomes infected. We know that's how it works. And the whole time, poor Dustin Hoffman is sitting in like an office somewhere trying to tell people to close the airport. And the airport manager's like, no, we're not going to close this airport. That's crazy. I mean, come on, we've seen the movie. Why does it surprise us when it happens in real life? It's like if Godzilla started marching towards Tokyo, okay? That's what this is like. If Godzilla was marching towards Tokyo and coming out of Tokyo Bay, heading straight for the city, would people be like, I wonder what's going to happen? This has never happened before. A gigantic monster lizard is coming out of Tokyo Bay, heading for the city. Do you think he'll play volleyball? It's like, no, sell your stock in Tokyo skyscrapers. They're going to come down. Okay, it's going to be a disaster. So I don't understand how something as simple, and by the way, when they make these movies, they consult the top virologists and things like that. A lot of, most movies, not all movies, obviously, but most of these kind of movies, they will employ really good experts to tell them what will happen. And they try to realistically model. They love to be like realistic about these things. I mean, they'll give you dramatic flourishes and such, but when they come up with numbers and when they show you the spread and when they have the cool maps that show where things are going and infections and whatever, they get that from real people. They like that. That's authenticity, and it stops people from writing down on Rotten Tomatoes like how unrealistic it was because of this and that. They don't like that. Everybody fact checks movies these days. So anyway, so it's like, so only the U.S. government was surprised by what happened here, and the Italian government apparently, but only the U.S. government was surprised by what happened here. And to say that you're shocked and that you had no idea and that there was no way anyone could have known. In fact, it turns out Arnold Schwarzenegger, 20 years ago, whenever the hell he was governor. He's so old now, it's weird. But Arnold Schwarzenegger had stockpiled supplies for a virus outbreak in California, and apparently over the years, though, it became like an annoying budget item because it was pretty expensive to keep the stockpile fresh and so on and so forth, and they diced it. Jerry Brown diced it. It's Jerry Brown's fault. I like Jerry Brown, but he cut it off the budget because it just didn't seem that necessary. They were spending a lot of money to maintain preparedness for a virus that never came. So, 10, 12 years after Schwarzenegger did it, they let the stockpile dwindle away and said, oh, well, there you go. We didn't need all those surgical masks. We didn't need all those things piled up in the warehouse. That was silly. It was just, you know, it's like paranoid, right? And Schwarzenegger, he was just angry about it. He was just talking to somebody. He said, look, he goes, the government shouldn't be all about how much money you can save. The government should be about being prepared to protect its citizens. I mean, and he's right. That's what the Army is. The Army is a $1 trillion expense we have just in case something happens. Why do we not have a virus army? All right, but going back to Bernie's question, because we'll never get anything done if we don't go back to Bernie's question, is what are my thoughts? Well, he asked, what are my thoughts? This is your fault, Bernie. So anyway, so my thoughts are that this was all known. So when I wake up in the morning and I see the market's down 900 points, and I say, why is the market down 900 points? And I say, well, because of 200,000 people are infected in the US. It's like, okay, well, what did I say on Friday? 200,000 by the end of the week. So, okay, I knew this last week, and again, I knew this, and so did Goldman Sachs and JP Morgan, and lots of other people knew this last week. This was extreme. I would have been more surprised if only 100,000 people were infected right now. That would have been surprising, much more surprising than 200,000. And also, by the way, we're testing more people, so of course you're going to get a spike up in cases when you're testing more people, but it's not all testing. It really still is completely out of control. So anyway, so does this alter my market outlook? That's the real question. Does this change anything? No, does not. And again, and I'm sorry, tone-wise, I feel bad for a lot of these people that get on TV and people ask them questions and they seem flippant about it. But I've literally been asked at least 100 times in the last 7 days what I think about the outcome and what I think about the deaths and what I think about this and how it's going to affect the market. So you end up coming across a little bit like uncaring, because it's after a while it really is just numbers. It's just something you have to talk about. So I don't want to be flippant about it, but it's going to come across flippant, because the reality is, again, and I talked about this the whole time this has been going on, this doesn't kill more people than cancer. This doesn't kill more people than smoking. This does not kill more people than driving without a seatbelt. This does not kill more people than vaping so far. I mean, it's, we're like really blown out of proportion. Now, why are you blown out of proportion? Because you know why? Because if you buckle your seatbelt, you don't think you're going to die from that. If you don't smoke, you don't think you're going to get cancer. If you don't, if you're healthy, you don't think you're going to have a heart attack. These statistics don't bother you if you don't think you're in them, if you're not one of those people. But now it's a virus and you can catch it from anybody. And every single person you see is a threat because you don't know where they've been. And you don't know if they're infected, and it's invisible and it's scary. And that's what makes it different. But you are no more likely to die from that than you are from a car accident. And in fact, actually, probably more lives will be saved from the lack of driving due to the lockdown than will be lost to the virus. So in other words, simply not driving is going to save about 100,000 people a month from auto accidents. And by the way, and you have to think about that too when you calculate statistics, because you suddenly it's like, wait a minute, it's how many how many auto accidents are there that the hospitals are actually going to get some relief there, because they're constantly treating people for auto accidents. Not necessarily dying, but people are injured constantly in auto accidents. People are injured in motorcycle accidents. People are injured skateboarding. All this stuff is not happening right now. So there's a whole wing of the hospital that's sitting empty that we can start using for virus people. We've traded one problem for another. Think of all the people who get heart attacks shoveling their driveway for snow. So if they're not outside shoveling snow, that's good for them too. But still, the bottom line is on the scale of death so far, 4,000 people in the United States dead. That's getting towards as many people as has ever been There's only been about 4,000 people in America there's only been about 4,000 Americans in the world that ever died of a terrorist attack, and almost all of those on one day. Yet, think about what we spend to combat terrorism. And again, you know why? Because it's one of those amorphous fears that could happen to anybody. So we fear it, and we all spend money, and we prioritize it way, way past the actual damage that it causes. And of course, you could argue if we didn't do that, blah, blah, blah. But that's like the same bullshit as with smoking. I mean, Michael Bloomberg would argue with it because he basically banned smoking from New York. He wanted to ban sugary drinks from New York too, because he's like, that kills as many people as cigarettes does. Freaking diabetes and obesity is just as bad as smoking. So, you know, there's things that are obvious killers of people. You know, we let, Rick, what was the number? 40,000 people a year in this country, 40,000, not 4,000, 40,000, 4,000 people per month in America die specifically because they don't have health insurance. That's a statistic, and you know, I mean, trust me, that's a statistic from when we were arguing about Obamacare back in the day. So you're like, well, is it really, do we let 40,000 people die just because we don't want to give Medicare to people? Just because we don't want to, you know, have universal health care? Apparently we do. That seems to be the consensus in the country, is it's not worth it. But the point is, we put up with that every day. Some poor person dies of something stupid that proper medical care would have taken care of. Happens every freaking day to 4,000 people a month. As many people as total have died of this virus so far. Certainly 40, it'll be, you know, hopefully not, but hopefully 40,000 people won't die of this virus this year. Yet next year, 40,000 people will still die from lack of medical care. And 400,000 people have died in the last 10 years, and 800,000, million, 2 million, whatever, going back to the time we've been arguing about healthcare, while millions of people die. That's not important. We don't freak out about that. We don't, you know, it's just, it's crazy what our priorities are. Anyway, so bottom line though, goes back to the same thing. 6 million people die of 6 million people die of heart attacks. 9 million people die of cancer every single year. It's the leading cause of death in America and the world, frankly. It's the same thing. Okay, millions of people, to 1 million plus people die of diabetes. 1 million people still die of AIDS every year. 1 million people die of AIDS every freaking year. 100,000 people a month are dying of AIDS while we're sitting here freaking out about 4,000 people catching a cold. So economically, Trump is actually right. Economically, the cure is worse than the disease. If the cure is to have everybody shelter in place and stop the economy, that's worse economically than the disease, because the amount of people who actually die is not going to affect the economy. And it's like a neutron bomb. It kills the people, but not the buildings, right? Like that's what the point of a neutron bomb is. You can blast off a neutron bomb in the middle of downtown. It doesn't cause any physical damage, but it wipes out all life within a mile or so. So, and that's the idea of that, which is a lovely capitalist idea, is that you can totally devastate a city, move the army right in, and start using it. You don't have to rebuild anything. Otherwise, you know, if you nuke a city, you have nothing that you can't use it as a base. But if you neutron bomb a city, you can just, you know, toss all the bodies out the windows and start using the offices. We are sick people, aren't we? Anyway, so this is the neutron bomb of economics, though, because we have a situation. The office didn't close. You might not be at work, but your office is still there. The company's still there. If everybody walked in tomorrow, if they gave the all clear tomorrow and you just went back to work and your customers went back to work and everybody just started ringing the phones and start ringing again, everybody starts getting their business done, and everybody for 2 weeks complains about how much of a pile they got on their desk because they fell so far behind, blah, blah, blah. We'd be back to normal in no time. The damage is caused by if this thing keeps dragging on and we keep not doing business, and it's if these companies start folding. If you just carried everybody for 2 months, and I just wrote that this morning, if you just carried everyone for 2 months, if you said everybody gets the same paycheck they got 2 weeks ago, everybody gets the same, every company gets the same, somehow, we fix your profits or fix your bottom line, and everybody gets paid out. The GDP of this country is 1.5 trillion a month. Congress already approved enough money to last us for 2 months. And economic activity isn't zero anyway, so you don't need to replace 100% of the GDP, probably just about 30% of the GDP. So for $500 billion a month, if you carefully figured out how to give it out in the way to replace all the damages that are done by the virus, the actual damages, you could keep the amount of money Congress just authorized. We could be shut down for 4 months and we'd be fine. Nobody would care. Just a 4-month paid vacation. So, Gunlich can say we're going to go to the March lows, and people, we could panic to lower lows. We could, because you can't stop people from panicking. But does that change the value of the company? That's what you got to look at. Each company going forward, what's it really worth? What's the actual value of these companies? IMAX. Will IMAX still exist a year from now? Will people go back to the movies? And I know that there are definitely people, I'm reading these articles, which are written by crazy people, but Jeff Gunlich is one of them, though. and they're like, oh no, this will cause a shift in the psyche of the American people, and they will never go to this again, and blah 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 blah. And it's like bullshit. Okay, bullshit. My niece is going to frickin' Disneyland. She was supposed to go to Disneyland this summer, and if she doesn't go to Disneyland this summer, which she probably is not going to do because they had a trip planned to go to Disneyland, she is damn well going to go to Disneyland as soon as it's humanly possible, because all she's going to think about forever is going to Disneyland. And as soon as it's safe to go, my brother will take her there because she wants to go to frickin' Disneyland because she was told that she was going to go. And people will go to ball games, people will go to concerts. First of all, kids are going to run right out. The second you tell kids they can go out, they're going to go right out and do everything they usually do. So they're most of it anyway. When's the last time you went to a ball game? When's the last time you went to a concert? Kids are the people who are doing these things, not old people like us. So they're going to go right back to doing their stuff. Okay, and frankly, if it was way worse than it is now, they would still go right back to doing their stuff because kids generally think they're invulnerable. So I mean, if you want, I watched the show Ridiculousness, which is like America's Funny. It's more a punk version of America's Funniest home videos, and you just cannot believe what crazy crap these people do all the time, risking their lives on a regular basis. So believe me, the virus is not really going to top their list of dangers. I mean, Jesus, when did AIDS start? AIDS started in the 80s, I guess, right? And or as far as being a thing people were conscious of. So AIDS started like in the 80s, and it ruined the party that we were having because we were having a total, we were having a nonstop party basically, and it bummed people out, but it certainly didn't stop us from having sex. Tinder exists now. You would think Tinder would, could you imagine telling someone at the beginning of the AIDS crisis that Tinder would be a thing? That seems crazy. You're like, no, people aren't like that anymore. They'll never do that again. Everybody's much more careful, and they're not going to go hooking up with strangers and blah, blah, blah. That's bullshit. And in fact, there's a hookup culture now, or there was until the virus started. But young kids hook up. And hooking up means just having quick random sex with people and never seeing them again, basically. They have no intention. It's not even dating. They just hook up for sex. So we kind of did in college too, I guess. But I mean, it's just a thing where they don't even they don't even bother to pretend they're going to have a relationship. So we used to at least pretend that we would call somebody or whatever. That's not even a thing anymore. It's just like, hey, you're cute. Hey, let's go. Okay. It's like, you're cute. Let's go have a nice time. So, you can't predict behavior. You can't know what people are going to do. People will adapt and do whatever. And this virus simply does not kill enough people to change behavior. It kills enough people to scare the crap out of old people and stuff, but you're not going to change most people's behavior in any kind of broad manner. So that's why I think, will we go lower than March? We could go lower than March if the numbers get out of control. If they start spread, if we continue to be as bad as we are at controlling the spread of this virus, and it doubles. Let's say we're at 400,000 next week, and we're at 800,000 the week after that, which will be Easter. And then after Easter weekend, after Monday, we're gonna have a holiday, I guess, right? Don't we have a holiday like Easter Monday or something like that? We're going to, or it's good, I don't know, something the markets are closed, either Good Friday or Easter Monday, the market's closed. So when we come back from that 3-day weekend, we're going to have 1 million people in the US infected. The chance of not having 1 million people in the US infected is very slim. That's a big, scary freaking number. And if you have 1 million, everybody's going to start expecting 2 million. And frankly, a week later, you're going to have 2 million. It's going to be very hard to stop. Unless we are slowing down by that time, we will have 2 million. And 2 million becomes 4, and 4 becomes 5 if you don't put a lid on things. But what I'm saying is that by Easter weekend, when we have 500,000 people infected, you will have, effectively, Trump will no longer be making these decisions. The governors will take over. Other people will take over. He may be removed from office at that point. People aren't going to put up with it. The consequences of letting it go for 2 more months means most of the country will become infected. Once you get to 5 million people, how are you going to not be infected when 10% of the people in the country are infected? Well, not 10%, but 2%. When 2%, when 1 out of 50 people is infected, how are you going to not be infected? How are you going to avoid this thing? You get to a point of no return. And there are people a lot smarter than Donald Trump who understand these numbers. And people who are powerful enough to stop him. The Republican Senate, don't forget, he could have been removed from office. All you have to do is get 4 senators to say, let's remove this guy. Could have been removed. The vote, they delayed, they blocked, they stopped it from happening. You could have removed this guy from office months ago. And the whole process only took like 30 days, really. Okay, so all they have to do is bring up articles again, or they could declare him unfit to run, unfit for office. They can have a doctor just say, nope, you're a lunatic. Let's get out of here. All right, now, I think just like when you get rid of a bad CEO, I think that the markets will go up considerably when that happens. I think if you remove Donald Trump from the equation, I think that you'll see the market go up considerably because, people who are making decisions see this. This is a disaster. We're handling it terribly. We're letting this get out of control for no good reason. Other countries aren't doing what we're doing. They're not as bad as we are. Oh, in fact, hey, let's take a look. Italy, 69,000 last week. Okay, Italy. Wait, let me make sure this is last week. I don't want to say the wrong thing. March 25th. Yep. Okay, there you go. April 1st. This is so horrible. So last week, Italy, who we consider terrible, right? 69,000. Now 110,000. That's not double. Last week, America, 55,000. This week, 200,000. That's 4 times, 3 times more. In the same week that Italy did not double. Let's see, Spain, 47,000. 100,000. Spain doubled. Okay. China, well, we know China. Germany, 37,000. Germany, 76,000. They doubled. But we didn't double. We went up 4 times. Iran, 27. France, 22. France, 52, more than doubled. Iran, 47, not doubled. Fucking Iran, didn't double. We quadrupled. England, 8,000. England's as bad as we are. 29,000. There's somebody, hey, look, we have a partner. We have somebody as bad as we are doing this. And why? Because Boris Johnson's also an idiot, right? He's got the freaking virus now. Boris Johnson is the same kind of idiot Trump is. Boris Johnson got up there and said, I'm shaking hands with people. I'm not afraid. Now he's got the virus. He set a bad example for his people. He led them down the road to disaster. That's what leadership does. Look at South Korea. South Korea, 10,000 people. Oop, that's now. Wait, last time. Oh, look at that, 9,000 people. That's why everybody keeps using them as an example. They had 9,000 people last week. Now they have 9,000 people. Look at that. It's actually possible to control it. There's Japan. Japan also, I think, has it under control. Holy crap, is Japan not even on this list? What am I missing? Iran, UK, Turkey, Belgium, Netherlands, Korea, Portugal, Brazil. Seriously? Norway, Czechia, Ireland, Denmark, Chile, Malaysia, Romania, Poland. Oh my God, Japan, 2,178. No freaking way. 1,100. They almost doubled, but they got a really low number considering they're in Asia. And who was the other one that's interested in Canada? 2,700 in Canada. And now Canada. Come on, you gotta be on there somewhere. Where the hell's Canada? Oh, there you are. Oh, no, Canada's not doing well. Canada's got 8,500. So that's 2.5 times. We have 4 times. But Canada also not doing the best job. So, you know, it matters what your government does. It matters what the people, if you're prepared, if you're not prepared, if you take it seriously, if you don't take it seriously, if you can get your people in line, if they trust you, if they listen to you, if they listen to you, but your people listening to you doesn't help if you give a wrong message. That could be worse. That's why NPR stopped carrying Donald Trump. So, but back to the thing though. Again, not enough people actually dying, not enough economic damage for me to sit there and throw out a company like will IMAX make money in 2021? Yeah, they will. So do I want to buy them in 2020 and sit on them for whatever the hell price they are? IMAX. So for $9, IMAX. IMAX. So $9 is $500 million. IMAX had 400 million in revenue. IMAX made, where's your earnings? Net profit, okay, 50 million bucks. So, see, 2020 estimates come way down. So IMAX was making 50 million bucks. They're going to make again, see, uninterrupted, because nobody thinks, so far, nobody's estimating that there's going to be a problem in 2021. The problem's in 2020. So they're going to make 60 million bucks, 70 million bucks on a $500 million valuation. So I don't give a crap what the price is in 2020. Even though this is a silly price. But, you know, what if they earn zero? What's the difference if they earn zero? As long as they aren't going bankrupt, I'm going to own them when they make $70 million. And when they make $70 million, they're damn sure going to be worth $700 million. And right now I can buy them for $550. Now, if the market gets good again and IMAX keeps growing, they'll be worth 20 times earning, which is $1.4 billion. And maybe they'll get to $100 million and they'll be worth $2 billion. Okay, let's say they make $100 million down the road and they're worth 20 billion. I'm sorry, 2 billion. They're worth 2 billion, just 20 times the earnings because they're still growing. So at 500 billion, at 500 million now, it's going to go up 4 times, almost as fast as our virus growth in America. Very impressive. As you can see, that's a world-beating number. So why don't I want IMAX? What, you know, if they're not going to go bankrupt, if they're not distressed, if they're not deeply in debt and defaulting, and they're not, because don't forget, IMAX doesn't own these movies. IMAX doesn't own the theaters. The theater chain pays IMAX to build an IMAX theater, and they split the revenue with IMAX when it comes in. So they build an IMAX theater, they get the IMAX films, and but it's from the theater, it's from the film company, it's not from IMAX. IMAX not running around shooting. They do make some movies for planetariums and stuff, but they're not like running out shooting movies. In fact, what IMAX does is they rent the equipment to the filmmaking company. The filmmaking company takes the IMAX equipment and shoots a film in IMAX. They pay money to do that. The filmmaking company then pays to print the IMAX prints of the movie. That money, that's revenue IMAX gets. Then the film goes and there's a split with the distributors, and IMAX gets a little tiny bit of money, not very much money, frankly, because that's why they only make $300 million, considering if you think about the top grossing movies of all time are in the billions now, and how many, and they were pretty much all in IMAX last year. So out of all those billions and billions of dollars of movie revenue, IMAX only got 396 million. They don't get much money per film or per ticket. They get $1. I don't know what they get exactly, but they don't get very much. So it's really, for them, it's like they're barely getting $1 for each person who sees a movie. But that's the point. It's a licensing company. It's not a physical company. Now they've got staff. They have internals that they have to deal with. But you know, in reality, they can carry themselves for a year and take the losses. They can absorb the losses for a couple of years probably. But what's going to happen as soon as people start going to movies again? Licensing. The money starts coming back in again. They're back in business. So why would you sell this thing off like that? The only reason you sell something off like that is if you think no one's ever going to go to movies again. The IMAX is the thing's dead. Then you look at Ford. Don't forget Ford. Last time we had a collapse in the economy, Ford didn't even need a bailout. And they are telling people now, we don't need a bailout. We don't need money. We're fine. We're going to be able to operate. But Ford went from $9 to $4.50. Ford dropped 50%. Will people ever buy cars again? Probably. Might be electric cars, but Ford's going to make electric cars. Might be self-driving cars. Ford's going to make self-driving cars. Might be flying cars. Ford's going to make flying cars. They're not going anywhere. They sold 130 billion, 150 billion dollars worth of cars. Okay, they made $3.6 billion in 2018, only 47 million last year. Somehow somebody thinks they're going to make 800 million this year. Next year they're going to make 3 billion. This is a key number though. Next year they'll make $3 billion. You can buy the whole company for $19 billion right now. At 10 times earnings, $3 billion gives you a 30 billion valuation. At 20 times earnings, $3 billion gives you a $60 billion valuation. This is not complicated stuff. This is a decade, once in a decade sale. I like to say it's tempting to say once in a lifetime, but it's not once in a lifetime because this happened in 2001 and this happened in 2009. And also, let's not forget, by the way, with my Yahoo. Okay. Let us not forget that in 2000 and where are we? Here's what happened in 2000. Okay, first of all, 2006, 2007. There was a stupid rally in 2007 which I complained about all the way up here. Same thing as I did this year. We got to a certain point where I started saying right about 13,000 on the Dow. And I said, this is bullshit. We shouldn't be this high. The same reason we cashed out our portfolios in September. I said, this is bullshit. I don't want to be a part of this anymore. Okay? We cashed out our portfolios. We did the same thing though. The market kept going up, so we restarted some portfolios, but with a lot less money, which is what I do. That's my system for doing it. I start with a lot less money so that if the market crashes, we have tons of money on the sidelines. We go back in. That was our plan with yeah. I mean, that's the way you do it. Believe me. Then the market crashed. Then it crashed some more and crashed some more and crashed some more and crashed some more. And the biggest problem people have is they started buying here and then it went even further down. But if you keep your money on the sidelines, if you wait out until you form a proper bottom, but when we thought we had a bottom, and we did, and by the way, we did have a bottom. This was a bottom. We did start buying a lot of stuff here. We bought a ton of stuff here when it came down all the way, but we were 50% invested here already at 8,000 because we thought 8,000 was crazy on the Dow coming down from 14,000. We did not see that it could go any lower, and it couldn't because it did. Here's, this is October, November, and here you are, or actually, I mean, it first dropped in October. So here's October, here's February already. That's 4 months later. Then from February, March 9th, I remember that day I was on TV with Tim Sykes on that day. I'm sorry, it was March 6th. Was it March 6th or 9th? I guess it was the 9th. Oh yeah, it was a Monday the 9th. That was a low, right? So it was like a Monday the 9th. Total disaster. We were buying hand over fist anything that wasn't moving. Then we came back up. So by the end of March, it's already back to where we thought was a fair value. Then we were just basically buying and being cautious, buying, being cautious, buying, being cautious. So what, came down, dipped and whatever, but it held 8,000. That's all we cared about. But look at this timing. This is almost a year. And then we go on a 10-year run from 8,000 to 24,000. Then it goes nonstop up and up and up and up and up and up and up for 10 straight years. That's what everybody's suddenly used to now. How come it doesn't go up every day? And it didn't go up every day. We had dips along the way and stuff, but whatever. But the point is, even in a huge sell-off like this, can it go lower? Sure, it can go lower. You think you're done, and then this happens. And then you think you're done, and then this happens. So Gunlich is saying, well, that's going to happen. I'm saying it doesn't matter. You get to a certain point, it only matters if you don't position yourself correctly and if you don't have an adequate protection for your portfolio. I don't care if it goes lower than here. If I'm buying Macy's at 8 and it goes to 5, it doesn't change the fact that I think Macy's is worth 8. They're worth what they make when things get normal. Going forward, that's what they're worth. So unless something happens that makes it impossible for Macy's to make the kind of money they used to make, unless Ford can no longer sell the cars they used to sell at the margins they used to sell them for, it'll go back to normal at some point. And back to normal means you can count on 15 times earnings. And if you can accurately figure out what those earnings are, you know how much money your portfolio will be worth in a few years. And all you have to do is invest and wait. It's not a complicated strategy, but it requires you to be rational and patient. And that's an almost impossibility, unfortunately, for most investors. So I hope that answers that question. Tim says he got out of his position, made $40. All right, Tim, I feel better about that. Sugar is down to 10. Tom says that's crazy. What is sugar? SG? Oh my God! What? Oh, guys, are you telling me oil hit freaking 21? I didn't. You bastards! Look, I'm so busy with this bullshit, and that just happened too. Son of a bitch. Oh my God, well, how much was that? That was a lot of money. I don't even want to think about it. Killing me. No, it's not SG. What is sugar? Sugar. I don't know. Anyway, okay, so sugar's $10. I agree that sugar is a good deal. We can look on the other chart. Oh my God, I can't believe that I could have just cashed that out at 21 bucks. See, it was a very expensive webinar for me. Futures. Now I'm sad. Soft. Sugar is soft. Holy crap. Wow. Wow, wow. I don't know. Trump did something about the mileage. Did he change the ethanol rules too? It seems odd. I would want to check that out before I jump in, but I certainly think that sugar should be good at that price. You see that $10 line's been pretty good. And we got into sugar last time it was down around here. We jumped in and we had a nice little run back up to there. This is a crazy drop though. I mean, that's if people are just bailing on this stuff. That is nutty. Greg says, from a portfolio management standpoint, it would seem that we should have dollar for dollar to cover short put assignment. Is this too conservative? Yes, it is. Or do you have another rule of thumb? Well, look. I'm really trying to think how to put this. Okay, first of all, it depends on your buying power, right? Most ordinary margin portfolios, the way it works is if you have $100,000, you have $200,000 worth of buying power. If you buy $200,000 worth of stock, you'll be using $100,000 in margin, but you'll be able to own the $200,000 worth of stock. If the margin requirement changes, though, you could be in trouble because they're going to want to have it cash back instead of margin back. So you'd be assigned. But the bottom line is, in theory, you're going to be assigned at that price. So let's say, for argument's sake, that we take up, I think Boeing, because Boeing is a disaster stock, right? So let's say that you had sold the Boeing 2022 200 puts. And let's say you sold them for 30 bucks and you thought that was a great price at the time, and now they're 85, all right, or 90, or well, it doesn't matter, 90, all right, 90. So you sold it for 30, now it's 90. What is your situation? You can either take a $60 loss, which sucks, but it's not devastating because if you had the ability to buy 200, if you had the ability to buy Boeing at 200 and now you're losing 60 bucks, you have now lost 30% of what you were able to buy. You're down 30% and you're all in cash. Since the market is down 40%, you're actually not in terrible shape because everything you want to buy is 40% off and you have 70% of your money. So it's not the worst thing in the world. Also, though, there's options. So for argument's sake, if you were, so you're down 90. Now, in reality, Boeing's at 130 and this thing should be 70, not 90. So if you hung on to it, it's got $20 of premium in it. Also, you could roll down to don't forget, you have $60 loss. So you could roll to 2 of the $100 puts at 30 bucks or 29 bucks. You're rolling your loss. So you're still obligated to own Boeing, and you're still obligated to the same $200, but now you're going to get twice as many shares. Okay? And then what if you get assigned at 100? Well, the thing is, though, at some point, if you do get assigned, let's say even if you took the assignment now at $200 and you're down 60 bucks, even though you wouldn't take the assignment because why would you take an assignment with $20 of premium left in it? But even if you did take the assignment now and you're in it for net 200 and Boeing's at 130, what can you do? You can sell the 150 calls for 40 bucks. That drops your net from well, you sold, don't forget, you sold the 200s for 30, so your net was 170 anyway. So your net's 170. You get assigned Boeing at 200. You had $30 in cash though from selling the puts. Your net is 170. Boeing's at 130. If you sell the 150 puts for $40, you drop your net from 170 to 130. So now you're in Boeing for 130 and you get called away at 150 for a $20 profit. But you can also then sell those same 100 puts for $30. That drops your net from 130 to 100. So now you're in Boeing for net $100. You may have to double down at $100 if you get assigned again. And you will get called away at $150 with a 50% profit. Even though you started off selling $200 puts, now you can get called away at $150 with a $50 profit, 50%. So there's lots of ways to fix it. You don't have to freak out about these things, but it all starts out by starting off with a small position. That's why in our education section in Phil Stock World, okay. We have an education section. And in the education section, we talk about, oh no, I'm sorry, we have a strategy section. I apologize. In our strategy section, we talk about right here, article on scaling. So we talk about entering a position. I do not generally enter a position when momentum's taking in the wrong direction, blah, blah, blah. I rarely take a full position right away. See the article on scaling in. Here's the article on scaling in. It talks extensively about scaling in. Scaling in is not complicated. Scaling in means you take a quarter position first. And then if the stock goes against you, you consider doubling it down. If you lose half of your quarter position because the stock went drastically against you, what have you lost? You've lost 1/2 of 1/4, which is 12.5%. So at the point at which you lose 12.5%, which is a drastic move against you in the stock, you've lost 12.5% of your entire allocation. You took a quarter allocation to start, you lose half of your quarter allocation, you're down 12.5% of your allocation. Now, you still have 75% of your allocation on the sidelines. What do you want to do? If you now allocate another 25%, first of all, don't forget that the first 25% went down to 12.5%. So if you allocate 25% more, another quarter of your allocation, you can now buy twice as much as what you started with. Not double, twice as much. You can triple down. Or you can adjust, or you can roll, or you can do lots of other things. And that's what we do in the portfolios. That brings us back to, where were we? That brings us back to what we were doing in the earnings portfolio, which I was going to talk about before. So good way to circle us back. So in the earnings portfolio, what do? That makes the calls pretty useless. The win calls were too high. We are lucky to get 950 back on those. So we took a loss on the calls. Then we doubled. So we bought 10 with win. See, we only had 5 $100 calls. They fell from 21 bucks to 950. They lost 50% of their value, right? We had originally allocated $10,000. Well, we sold these calls. We originally allocated about 7,000 bucks to the position. Okay, didn't work out at all. We took a loss. So I said, well, okay, fine. We took a loss, but we still like win, especially now at such a crazy low price. It was 53 bucks at the time, 54 bucks. So I said, you know what? Great. Let's take the 950 back. We're going to take the $11 loss on the position. Times 5 is $5,500 loss. And so we said, forget those. But now let's buy. So we have $5,500 from the. Let's say it's a $100,000 allocation. Let's say it's a $50,000 allocation. So we lost 10% of our 50. Exactly what I said it was, right? 12.5%. We lost 10% of our $50,000 allocation. And now, so I said, okay, fine. So now let's buy the 30-50 bull call spread for $10. But we're going to buy 10 of those. So we're going to spend $10,000 now. So I lost 55, and now I'm spending 10,000 more. So now I've spent $15,500 on the position. and let's sell the puts for 5. So now instead of 15,500, I've now spent $10,000 on the position. How much is this position? It's a $20,000 spread. So I lost 5,500. I allocated more cash to the position. I sold more puts, and now I have a net 10,000 entry on a $20,000 position. But that $20,000 position pays me at $50, 100% of what I put into the position. Whereas before, I needed to be over 100 just to get my money back. I had to be at 120 just to get my money back. So on the whole, this catastrophe of win dropping 50% has been a great thing for us. Why? Because we have options, and because the VIX got pumped up while the option fell. So it wasn't just win. See, now if just win falls like that, you might be in worse shape, because if just win falls, then the VIX won't be that high because it's just win, not the whole market, and you can end up taking just a big bath. But in this case, the whole market fell. Win fell with the market. The VIX was all pumped up. All the options had inflated prices, and we were able to make this adjustment. But you know what? If you aren't ready, willing, and able to make these adjustments when the opportunity is there, you won't have another chance. That's why it's really important not just to wait for trades and find out about trades and panic at the end. You have to understand the mechanics of what you're doing. You have to understand that when you look at your portfolio and it says it's down 32%, that you know this 32% is mostly because of stupid option pricing. Okay, so when you have a negative $24,000 here, right? These calls, the short SQQ here, is a great example. You have 30 short 2021 SQQ calls, right? And they're minus $24,000. But SQQ is only at 27. It's completely out of the money. This is all premium. It's all going to disappear over the course of the next year. Whether SQQ goes higher or lower, the premium will still go to zero. Doesn't matter what SQQ does, that premium will become zero. The call might go in the money, but the premium of the call will disappear. So that premium of the call is actually, it's not just a loss you're showing, it's all of the $31,000 value of that position is all premium. So I have $31,000 coming to me that is not reflected in this portfolio. And if you understand your options, you can look at all your positions and figure out like how much of this money is unrealized, and how much of that is impacting your statement. How much better off are you than this looks? And when you go through this and you realize you have $100,000, $200,000, $150,000 worth of premiums in here, and that every single month as time decays, you'll pick up $10,000 more just from the time decay, you start to go, this isn't really in bad shape. I got $120,000 coming to me from time decay. So even though right now it looks bad because the VIX is so ridiculously high and all that, there's two things that are going to happen. You're going to have time decay, plus the VIX will eventually go lower, and that will lower the option pricing, and then you're going to also look like you're in way better shape. Therefore, this is a great time to adjust. Therefore, we take advantage of the high VIX and we make these adjustments. And I didn't spend much money here. I had a $5,500 entry and I turned it into a $10,000 entry. I still have tons of cash on the side. I had $138,000 in cash sitting in the portfolio. I used $5,000 to drastically improve this position. That's what it's all about. But you got to understand what you're doing. You can't just sit there and say, what's the next trade? What's the next trade? What's the next trade? You've got to understand why we're doing these things and how it works. But if you do, then the changes are obvious. It's of course you're going to do that. Of course you're going to make that move. Of course you're going to take advantage of that roll. They're giving it away. Do you have a rule of thumb for how deep in the money you purchase a long call? No, see it all depends, because you have to determine which the best strike is. Where am I buying the least premium, selling the most premium, but I also have to be comfortable with my target strike over that period of time. So in win, I was no longer comfortable at all that we're going to get back to 100. Therefore, and I said that here, I said the $100 calls are useless. All right. I mean, let's see what I wrote. Is wind going to be viable down the road? $53 at 5.7 billion in market cap. They make 500 million a year, so they make 10 times earnings. But this will not be a good year. And they burn 500 million a month. I'm doing all the math. They burn 500 million a month in expenses, and we're having no revenues coming in, so they're probably going to lose 1.5 billion dollars. Do they still have to pay back their loans? Yes. Do they still have to pay Cirque du Soleil? I don't know. The buildings are assets, but they're only assets if somebody wants to buy them. So for the year, they're going to take a $2 billion loss, and let's say they make 300 million a year going forward. And 15 times 300 million going forward is 4.5 billion, which is a bit lower than it is now. Therefore, I'm going to take a spread that's even lower than where the strike is now. That's my logic. I'm retargeting at a much lower strike because I don't think they're going to really zoom back up. I don't see that they're going to recover that well because they've got a lot of issues. They're going to have a big hit this year. Maybe they'll get bailed out, but I can't count on bailout. That can't be my strategy, is to count on a bailout. So I have to assume worst case. They're going to lose $2 billion this year. It's going to take them many years to pay that back. And it's going to be a long time before they can get back to normal. So therefore, if I want to stick with wind, I'll do that. I do like wind. I do like I said, the buildings are a big asset, but unfortunately, they're not really an asset if nobody wants them. So they're going to have a very rough couple of years, but they do have the wherewithal to ride this thing out. So I don't mind sticking with them. I mean, would it be my first choice of a stock now? No, not necessarily, but it's in the portfolio, and I don't really see the point in killing it. It's not that, and also it's not a big position. We're only putting $10,000 to work. That's the key. I'm not taking a huge risk here. I'm putting $10,000 to work. I think it has a pretty high percentage of coming in. If we're wrong, we'll take a $5,000 loss eventually and say the hell with it. Okay, who else? The webinar is timing out. My connection seems okay. I don't know what's going on. Randy says, I had to share with you during your show, Mike Pence blames China for any delay in the U.S. response. It's not Trump's fault. Yeah, I know. I heard that today. It's like they're saying China didn't tell us in time that it was a bad virus. Again, January 23rd, dumb Phil Davis, writing his dumb daily column, says this is a disaster. We have to be prepared. It's like SARS. That was January 23rd. I did not need a team of scientists to tell me this was going to be a problem. Eric says, do you have any favorite place for long-term treatment prevention of COVID-19 or future viruses? No, and I think it's very faddish to go after that. Gilead, we picked up Gilead the same time that we started hedging for Corona. What I did say at the time was that Gilead, which was only trading at $50-something at the time, was they had made the treatment for SARS. And so since this was another kind of coronavirus like SARS, I said Gilead would be the logical people to play with. I understand Abbott Laboratories has a test, so they seem to be doing well with it. There's that company with an M that I forget the name of, but they're also working on a vaccine. But again, it's a faddish thing. It's going to come and it's going to go. I mean, if you had done that with SARS, you would not have made any money because you're chasing something that's a 3-month thing. And it's obviously baked in. It's not, you're not the first guy to say, oh my God, let's chase whoever has a treatment. We grabbed Gilead day one because I said this is like SARS, and SARS is like the thing that Gilead had a treatment for. That was the only logical play to make there. All the rest is, again, faddish. I don't know. I don't want to play that when I can buy Ford instead. I know people are going to want cars. I don't know that people are going to want Abbott's particular brand of treatment. You know, I don't know, or Abbott's particular brand of testing. I don't know that people are going to want Gilead's brand of virus treatment. Actually, I don't know for sure. Gilead is generally a good company. It's a big giant blue chip, so I like it. But if you start going after the little companies that may have a cure, may have something, that's very speculative. It's really faddish. It's not my kind of thing. Greg said, could you walk through an adjustment of a position if the position stays flat to slightly down I could have an hour ago. Ask me in chat though. I'll be happy to do it, but it's too long form. Okay. Randy says, Phil, time to go to the store for TP. Okay, why? Florida says stay at home after a week. Yeah, whatever. Okay, so yeah, Florida is stay at home now. So we don't have any toilet paper. I went to the store. I've been going to the store for 2 weeks looking for toilet paper. There's no toilet paper. We don't need it, thank God. But I mean, we think we have a month's supply at least, maybe a 2-month supply. So we're not particularly worried. You can, by the way, buy toilet paper on Amazon, but it's not brand name. So there's like Amazon has generic toilet paper. We're not desperate enough to try the generic toilet paper. It could be perfectly good. It could be probably the same guys that make Charmin, just don't have a label on it. I have no freaking idea. I know my house in Jersey is right next to the Markel Paper Company, so we can always get Markel. We can always go raid that place at night. A big day. That's right. We have I don't have it in Florida, but I have it in New Jersey. I have those Japanese toilets with the bidet, which are fantastic. So I highly recommend those if you guys are really stuck. You know, like they used to be expensive. Now they're like $500 or something. And it's like fantastic. I know it may not seem like a great thing. You're like, why would you want to have like water sprayed at your butt but believe me, unbelievable. It's like it really is a much more civilized way to go. Greg says, thanks for the schooling. No problem, Greg. And ask me that other thing later, and I'll be happy to tell you too. Theo says, what are your thoughts on the January 21 halfway in the money bull call spread with sold puts on ET? Energy, look, anything in the energy space is getting killed. I mean, I cannot believe the way Energy Transfer sold off. That is just mind blowing to me. This is a pipeline company. It's like IMAX. It's like they don't make oil. They're not drilling for oil. They're transporting oil. The oil's got to go from here to there. At some point, it's got to move. This is how it moves on these pipelines. They still got to pay these guys to move the oil. It's crazy how low it is. So if you're asking me, do I think that's a good play? Yes, I think it's a very good play. I think this is incredibly stupidly low panic sell-off that makes no sense. But why is it sold off like this? Because nobody particularly wants Energy Transfer. There's not people sitting there rolling over in their bed saying, oh, I wish I had more Energy Transfer. But they're in the same ETFs as all the other oil companies. They're in a lot of energy ETFs, and those energy ETFs are selling and selling and selling and selling. And so if there's nobody particularly buying Energy Transfer and the ETFs are dumping Energy Transfer along with all their other energy stocks, then there's no bidders for Energy Transfer, and you see things like this gap down kind of thing. There's nobody bidding on it. This ETF says, I need to sell 1 million shares of Energy Transfer, and there's not 1 million buyers. So the thing drops until you find somebody who's willing to buy 1 million shares. And that drop was 20% lower. And then that got exhausted, and the ETF wants to sell another 2 million shares, and all of a sudden it goes to 6, then it goes to 4. But it's all ridiculous. But it's all because somebody had to dump out of Energy Transfer. Another problem, though, with these companies, though, is especially the big dividend paying guys like Energy Transfer, is if they suddenly don't pay their dividend, which is very, very likely because the bailouts are contingent upon them not paying dividends. So if they suddenly announce they're not going to pay a dividend anymore, now all the dividend ETFs are going to dump them because they can't be part of the dividend ETF because they don't pay a dividend anymore. So even if they weren't in an energy ETF, they may be in a dividend ETF. So that's the problem. So again, it goes back to scale in. Only buy some, don't overcommit. Be very, very happy when it goes to 2 that you get to double down. And if it goes to 1 from there, you get to double down. And if you're not willing to do that, if you don't have the conviction to stay with it, build up a position and move forward, don't even start. Because there's no bottom to anything right now. Because that's, especially when you think about it, you got to think of the logical chain of events that happens here. They haven't announced that they're not paying a dividend anymore. When they announce they're not paying a dividend, another wave of selling is going to come in. You can see all the value you want, but it doesn't matter. If the ETF rule says we only hold stocks that pay a dividend, and Energy Transfer says we don't pay a dividend anymore, that stock's gone from that portfolio at whatever price the market will bear. So unless you're going to be the guy who's going to bid it up, you're going to have to wait until it finds a proper bottom. All right, that seems to be it. That's good timing. I got through all the questions, and it is time to end the webinar. And the Dow is still down 900 points, no improvement. And meanwhile, I missed how much money. Everybody has to mail me a check now because freaking oil. So mad. Oh, wait, it's coming back. All right, wait, I'm not gonna be so mad then. All right, so now I'm gonna put a stop at 2050 because that's bullshit. All right, so now I gotta put a stop at 2050. But that thing was all the way up at 21. I could cry. All right, so we're gonna leave that on. Hopefully we can get back to 21, and if not, we're gonna take the money and run at 2050. And that is it. Everybody have a lovely week. Enjoy all the fun. Hopefully we will find a bottom, and we will do this thing again next week. All right, thanks everybody. Have a good day.